All right, this is my S&P 500 analysis. I'm going to do a 1 to 3 week view. And I want to show you the futures hub first so you can get an idea. The reason for that is because, well, I was on vacation last week, so I didn't show any analysis. And of course, got a ton of emails. What happened to market week? Where was your S&P 500 analysis? And you don't have to miss it when I'm off. And if I don't show exactly what you want to see in the S&P 500 analysis or in the indexes or in any of the 24 different futures contracts that we offer analysis on. I'm going to show you our futures hub and you'll be able to see how you could get that analysis. This is basically a single page that has all of our analysis in there. You can see that we do analysis on the indexes, the treasuries, currencies, metals, energies, green, softs, and crypto. And the colors of these, which you can see the indexes are all red, is the sum of the evidence, really looking at our directional bias, which is putting together 3 different time frames and all of our individual proprietary studies. And you can see in here that, the indexes are essentially negative and rallies should fail. And looking at here, the TNX yields are negative. So in other words, bonds are positive, and you can see that right in here. And the currency market, you can see the dollar is strong right there. The dollar against the yen is strong. It's green. And what these other currencies look at, the metals, gold and silver, on the neutral side, and that's because of stronger conditions in the longer term. Platinum and copper are negative. Energies, you can see the conditions there, the grains and soft, and crypto, which we think are going to have another big hit to the downside. Just so you can get a peek of what this looks like, I'm going to give you the S&P 500 analysis. But if you click on that, you can see you can get the weekly chart right over here, and you can actually blow that up. I'll view it larger, as you see right over there, and you can see what our weekly analysis looks like. Looking at that, this you could see is the weekly chart. This you could see is the daily chart. Here's our video analysis, so you can just go directly to the Future Speak where that is and watch just that segment right over there. Here's all of our technical details in there. You can see the directional bias is very bearish. The key low dates in the daily and weekly, the very key levels right in here. And all of the notes that I put up get put in here so you can see everything that I'm saying about the market. So this is just a fantastic thing on the Futures Hub with all of these futures that I think are followed by so many thousands of people that are in here. So, oh man, look at all this news popping up. All right, so I just wanted to give you a peek there at our Futures Hub. Let's take a look here at the S&P 500. So this is the analysis on the S&P 500 daily, and the relief rally is really here, and we want to look at where the resistances are and what is likely to happen, looking at the daily chart on SPX. So that switched over to ZB. Let's move this to SPX. And you can see in here the cycle analysis. So for those of you that are new, we'll just blow out. You can see these 4 cycles we're looking at on the bottom. So this is the dominant cycle right in here. We're showing what the harmonics are right in here. Cycle analysis is like music, really, and that's why we refer to it as harmonics. And we're looking at 11 and 33-day cycles. And you can see right in here this dominant cycle right in here and how that's reflected in the charts right there, and the minor cycles that come right in here. Now, the charts, this is not analysis that says, okay, we're following some lines, and that's what the chart analysis is. This is actually energetic movement. It's money flows that we look for in here that has important information. And when you get a rally that peaks on the left side, that's called the left-hand translation, and the odds are pretty high it's going to decline through that time frame. The yellow area are the greatest periods of risk, as you see right in here, in that decline when 2 cycles are are nesting. The same thing here and over here. And that same period comes out over here into late July and early August. So what we're looking at is the minor cycle, which made a little bottom here, and then we got a rally. Let's just look at these last couple of cycles right here and get a little closer peek. And you can see right here, this is into the resistance zone again. It rallied and then completed the minor cycle, hit the minor support, and then moved up again. And these resistance areas are going to be very tough because of this negative flow right over here of money. It says that the next one will likely be also a negative cycle. So what we're looking for is at some point the break over here of 36.36, and likely this area of resistance, this is around 3900, the middle of it right over here is around 3977, and the top of that zone right over there is around 4050. So if you look right in the middle there, that's 3972. That would be a reasonable place, or close to 400 on the SPY, where it would be likely that the market would rally to. Now there has been some improvement in here, and that is, you can see in here, this is the slim ribbon PO, and when you get these negative signals, it gives you a situation where it's likely to keep declining. It neutralized in here and then got negative again, and now it neutralized again. So for some period of time, we would expect it to try to get up in here, but the longer term conditions in the intermediate or weekly charts are negative, and that's why when I showed the futures hub, you see the directional information as red. And that some of the evidence does say that the market is likely to fail again. So we would look for the minor cycle to come up somewhere in here to the middle of resistance, getting up somewhere near the 4,000 area, then coming down again, maybe trying to rally again, and then this yellow area being a significant period of risk, where we're looking for a decline that could easily take it down to the 3,500 level, and on the weekly chart it shows as low as the 3,200 level. So there is a good possibility over these next number of weeks that the market is able to get a little more traction on the upside, and then gets into a much bigger downside force that was putting together the weekly and the daily into a nested area that comes out over here into late July to early August, and that is likely the time period we will see a very significant low for the stock market, maybe the low for the year at that time, because we think that the fourth quarter will be a better quarter for the stock market, with then potentially a lot of risk out into next year. So for now, the market has done its damage. The market fell very sharply, of course, and now we're in a period of a rebound and slightly improved short-term conditions, which should get you up to somewhere close to the 4,000 level on the S&P 500. Now, one little caveat in there, and that is that if you get below that last low right over here, which is approximately 3739 in the S&P 500, that will tell you that this cycle has already turned down and that a lot of risk exists down there. If for some unknown reason the market gets its legs and gets above the 4168 area, 4166, that is the upside reevaluation level. So through there, the market gives you a much more bullish scenario, 4166. I do not expect that. Underneath that low right over there at 3739, it gives you a resumption of the negative conditions, and likely that the market is moving down very sharply at that point. So that's a look at the S&P 500. I hope you found that to be very, very valuable information for your trading and your investing. The relief rally is here, but the risks remain high.